Good morning, traders. It is Tuesday, July 12th. Let's get right to it. The last pick, actually, we'll get to the last pick in just a second. Last week I highlighted RBLX. It really ran higher and then it just kind of sat there. They needed to digest those gains for a few days, but I had reiterated on Friday before the open. So the video was produced before the open. I said, hey, I love RBLX. If the stock gets through 40.35, it's going to be a really nice day trading buy. There's your breakout right there. Stock ran $4 higher on Friday. You could have gotten in on this trade anywhere in here, but you had to take gains. Right now, we are only day trading. The market volatility is extreme. You don't know what's going to happen one day to the next. So when you get a bearish hammer off the high and a double top lower high, you've got to take some gains, especially when you have a 10% run in the stock in a matter of a couple of hours. RBLX did pan out, was a nice pick. You can see how it gave some of those gains back. Apple was the other stock that I thought would perform well on Friday. So let's take a look at that. And we'll go back. You can see a little weakness yesterday. The market sold off over the weekend. And there you can see Apple, very nice relative strength, orange line above zero. So you also had a nice day trading opportunity in Apple. Here you can see it's starting to lose a little bit of its relative strength. Got a little bit of a pullback here, gets toppy. Price action getting compressed, tiny little candles, get a nice long red candle off of the high. That's a signal that you need to take your gains. Stock pulls back, double bottom low right in here, higher, low, double bottom. Hey, this is looking pretty constructive. 1 OSI above zero, downward sloping trend line, breach to the upside. Yeah, you've got a nice little entry point in here where you could have made money on Apple again. Let's take a look at the market, see what it's telling us. I am getting a little bit more bearish. You can see how the market's had a tendency to sell off hard. We have these transition areas where we go from a compression, wham, next leg down. Compression with some very nice bounces. Next leg down, wham. Compression, get some bounces. Here we actually established a new range, but it didn't last long, and this drop was big. We see that we're getting a little bit of resistance right here, and there is price congestion around this horizontal. Was support, now resistance. And that comes into play around 392.50 or so, but you can see how this little bounce here is starting to run out of steam, and the volume is very, very light. Upward sloping trend line could be breached to the downside if this trend line fails, which comes into play around the SPY 380 level. We are going to test the low. We have earnings season coming up right now. Banks are going to lead off earnings season. I'm hearing mixed reviews. The consensus seems to be that earnings are going to be fairly weak. Earnings season in general, expectations have been lowered, so the bar has been lowered. Should be pretty easy to hurdle. However, the guidance is the critical part. Will supply disruptions and higher input costs impact bottom line growth? And what do they have to say about conditions and the outlook for Q3? That's going to be critically important. Personally, here's how I see things playing out in July and August. You're going to get some bid to the market on earnings season, especially ahead of mega cap tech stocks. So analysts are going to be watching, watching, watching. You're going to get that last push of tech earnings, and it's going to coincide with the FOMC statement. 75 basis point rate hike likely now. Hot CPI coming out this week. 1.1% is what they're looking for. That is a huge number. The Fed is going to hike interest rates, and then they're going to say, bye-bye, see you in September. We're planning another rate hike in September. So everything goes on autopilot as Washington, D.C. goes into recess. The Fed is gone. All the politicians flee the Capitol, and then the market sits and festers and stews for a month, watching all the economic data points. If any of those data points start to soften, the market is going to pull back. I do not believe that asset managers are going to aggressively buy stocks until the Fed says we're done raising interest rates, until they've seen if economic conditions are deteriorating, and until they start to see some relief in inflation. We don't have any of those things right now, so I believe that the longer term trend is still the one that you want to join. And that's why we are going to be looking on the short side for trading opportunities. Conditions in China are not good. The headlines that you're seeing is that the Chinese government is in fining some of the major tech companies again. That's not good for those stocks. So you're seeing money flee those stocks and they actually set up for a good shorting opportunity. But here's the really big news, and you've got to dig for these headlines. China has limited the amount of money that people can withdraw from their bank accounts. They want to prevent a run on the bank. That's not a good sign. That shows that people that have their money there deposited are worried that they won't be able to get their money out of the bank. You also have the loan defaults by a lot of the major property developers. Not a good scenario. China's been posting economic numbers, and I haven't seen this before. Analysts are absolutely attacking those numbers, saying this is just a big lie. And then they cite a variety of different data points that are contrary to what China is reporting. Bottom line is, I smell a rat. I think China could be heading for a credit crisis. We also have big time rising interest rates in emerging countries. So all is not well on the credit scene right now. And when China starts limiting the amount of money that people can withdraw from their bank accounts, that raises the fear level very, very high. Imagine if they did that in the United States and said, hey, you can only take out $500 a month or $1,000 a month out of your bank accounts. There would be absolute panic. So watch those headlines, especially coming out of China. I don't like what I see. And COVID, the new variant, is spreading again. So we have lockdown throughout the country. Macau has been shut down. China, very scary situation, second largest economy in the world. If they go into a credit crisis, it is going to impact all markets. So let's take a look and see what was coming up yesterday. For those of you looking to short and perhaps even swing short, this upward sloping trend line right here is your key. 380, 382.50 on the SPY. If we close below that level, I think you can take some shorts longer term on the notion that the low of the year is going to be tested quickly. So if we go through our searches, we're going to take a look at heavy selling. It's the first one on the list. This shows the stocks that were below the prior day's low on heavy volume. There are a few other variables included, and you can see Alibaba is right at the top of the list. So these stocks tend to move a lot overnight because they're ADRs. And you can see how BABA sold off, never got off the deck. I believe it's indicated just a touch higher. Here's why I like this short. You can see orange line below zero on the daily chart, so it's starting to show some relative weakness. That upward sloping trend line right there has been breached to the downside, and you can draw one right like this that has many, many touches. The more touches, 1, 2, 3, 4, 5, 6, the better. You can also see that there is a horizontal resistance level right here, and there is a horizontal resistance level right here. The stock was not able to get through that horizontal resistance. Tails above body, long wicks, bearish hammers. You can see that those are indicating resistance. Now we've dropped through this horizontal support level and we've breached that upward sloping trend line. Let's see where the major moving averages come into play. So we'll overlay the 200 and the 100 day and the 50 day to see where they come into play. Lo and behold, that 200 day moving average is providing resistance. If you are looking for swing trades, which I'm pretty much discouraging right now, but if you're going to take a swing trade, best to be favoring the short side. I believe that selling an Alibaba out of the money bearish call spread, call credit spread above this 200-day moving average makes sense. I believe that that resistance is going to hold. I believe that the stock has a pretty clear path to that 100-day moving average. So there's a possible swing trade that you can be doing that also will allow you to distance yourself from the action and to take advantage of accelerated time premium decay. So you can see that 200-day moving average providing resistance, and we've got plenty of room on this trade down to the 100-day moving average. Alibaba, BABA is your pick of the day. I like it on the short side. I think you're going to continue to see weakness. Hey, look what else is on the list. PDD, Chinese stock. Upward sloping trend line here. Breach to the downside. Horizontal support violated. 200-day moving average right there. Plenty of room down to the other major moving averages. When I told you about, there you go. There's a wedge formation. Longer term downward sloping trend line. Upward sloping trend line shorter term. Wedge formation. Breakdown to the downside. Horizontal support being breached. Yeah, I think Win could be another nice short. LVS also has a lot of revenues from China, Macau specifically, upward sloping trend line, breach to the downside, 50-day moving average. And let's see if we've got any other Chinese stocks in here. None that I can see off the bat. JD is another one. Just giving you a feel. Actually, there's a horizontal breakdown and a breakdown below the 100-day moving average. There is another Chinese stock, but it's an ETF. FXI. These are the largest Chinese stocks. Look at that upward sloping trend line. Many touches. Still has to get through that 100-day moving average. When it does, it's probably going to breach that 50-day moving average as well. I like BABA on the short side. The next time I do a video, I'm quite confident that the market is going to be testing this upward sloping trend line as far as the SPY, and I believe that BABA is going to be lower than its current price. Stick with day trades. If you are going to swing trade, very low probability environment, favor the short side and do so by distancing yourself from the action and selling out of the money, call credit spreads on stocks that are weak relative to the market. That's all I've got for you today. We'll see you in a couple days. Thank you for watching this YouTube video. I'm Pete Stolzers, and I'm going to keep the trade ideas coming along with lots of education, so make sure to subscribe to the channel and please turn on your notifications so that you never miss another trade. If you like the content, please give it a thumbs up. I've loaded 2 other videos that I think you're really going to enjoy. Stay tuned. We'll see you soon.